Welcome. Today's lesson is on exploring alternatives to long term care insurance coverage. The journey into the golden years should be filled with joy and peace of mind, but uncertainty surrounding long term care expenses can cast a shadow over this anticipated period. There are alternatives to traditional long term care insurance that can help you navigate the complexities of planning for the future. This audio cast will guide you through various alternatives, helping you make informed decisions while addressing the importance of financial planning for long term care. I decided to create this audio cast on this topic because so many of my clients who have bought long term care insurance 20, 30, 40 years ago are now trying to utilize the benefits because of illness or physical or mental decline, and they're having problems. So I thought it was really important that I address alternatives to long term care insurance coverage. If you bought long term care insurance without a cost of living rider, you're going to have sticker shock when you try to get home care or other services provided when you see what the cost of things were 20, 30, or 40 years ago is nowhere near the cost of what things are today. And it's really challenging. And I have stories I'll share with you in this audio cast. So let's get started. As you embark on this exploration of alternatives to long term care insurance, consider the various options available to meet your unique needs, financial situation, and risk factors. From short term care insurance to hybrid long term care or life insurance policies, the possibilities are vast, but understanding each alternative will empower you to make the best possible choice for your future. Basically, we're going to cover understanding the need for long term care, involves exploring various options to plan and cover costs associated with aging, illness, and disability. You'll also evaluate personal and family preferences, health status, and potential care needs when considering different long term care planning options, such as short and long term insurance policies or annuities. And you're going to learn that it's important to seek professional advice before making an informed decision on a suitable option for your situation. So let's start talking about understanding the need for long term care. Long term care is about getting the support you need to live your life to the fullest, even when everyday activities become a challenge. Whether it's for a short period or a longer period of time, there are services available to you to help you maintain your independence and stay safe. When it comes to long term care, there are various options to consider depending on your individual needs. Most often, care is provided at home by your loved ones who volunteer their time and support. However, there are also facilities like nursing homes or an assisted living facility where you can receive the care you require. Long-term care includes a range of services that can help you live independently and safely when you can no longer handle everyday living activities on your own. There are even memory care facilities that take care of individuals diagnosed with Alzheimer's disease or other types of dementia. The most common type of long-term care is custodial care, which includes help with bathing, dressing, grooming, using the toilet, eating, and moving around. This is provided in assisted living or in nursing home. You never know when you might need long-term care, but certain factors can increase your risk. As you age or you have a serious health condition or disability, the need for long-term care becomes more likely. If you prefer to receive care in the comfort of your home, there are a variety of in-home care organizations that provide support to family members that have been chronically ill. The majority of in-home care is provided by family members or family caregivers. They are the single largest pillar of the long-term care industry. But be aware the stress of caregiving has negative consequences on the family caregiver. 63% of family caregivers become seriously ill or dies before the person they are caring for passes. This is when many aging seniors are placed in an alternative long-term care setting, like assisted living or a nursing home. So let's talk about the challenges with traditional long-term care insurance. Traditional long-term care insurance functions similarly to policies for auto or home insurance, with pay premiums for the duration of the policy. However, traditional long-term care insurance can be expensive, with increasing premiums and coverage that may not meet all care needs, such as services provided by an adult daycare center. Buying a policy may have an age restriction. This should be taken into account while you're making the purchase. Waiting periods, also known as elimination periods, can vary depending on the policy, affecting the cost and duration of coverage. The lifetime maximum benefit of a policy is calculated by multiplying the daily maximum benefit by the estimated number of days for which benefits are to be paid or reimbursed. Regular premium payments are essential to maintain the policy and ensure that the benefits are available when needed. While traditional long-term care insurance can provide financial protection against the cost of a nursing home, assisted living, or custodial care, it's not necessarily an ideal solution for everyone. And here are some considerations to keep in mind. Premiums can be quite high, and not all long-term care expenses are included in the insurance coverage. Those who are already ill may not be eligible to receive a policy. And when selecting a premium for long-term care insurance, it's important to ensure that you can comfortably afford it. However, keep in mind that a premium may increase during the policy's duration. That's especially so if you did buy a cost of living rider. The coverage should include assistance with daily living activities. To navigate the complexities of traditional long-term care insurance, consult a certified long-term care insurance agent who can assist you in providing information on available options and help you choose the best policy for your needs. As you continue your journey into the world of alternatives to long-term care insurance, it's important to keep these challenges in mind. Each alternative offers unique benefits and drawbacks, but understanding them will empower you to make the best possible decision for your future. Let's talk about short-term care insurance coverage. Short-term care insurance is an alternative to traditional long-term care insurance that provides coverage for a limited duration, typically no more than 1 year. This type of insurance offers lower premiums and flexible benefits compared to long-term care insurance. It may be an attractive option for those who need coverage for a shorter period of time, such as during recovery from an injury or illness. The main difference between short-term and long-term care insurance is the time frame of coverage. While short-term care insurance provides coverage for a restricted, defined period only, long-term care insurance is designed to cover an extended period, usually more than a year. However, short-term care insurance has its limitations. The coverage may not be sufficient to address all long-term care needs, and the duration of coverage may not be adequate for those who require care for an extended period. Additionally, Medicare provides post-hospitalization rehab for up to 20 days, which can extend the coverage beyond 1 year. Short-term care insurance can be a viable option for those who need coverage for a limited period, but it is essential to weigh the advantages and disadvantages before making a decision. As you explore other alternatives to long-term care insurance, Keep in mind the unique benefits and limitations of short-term care and regular health insurance both. So let's talk about life insurance with long-term care riders. Life insurance policy with long-term care riders offer a solution that combines the benefits of life insurance with long-term care insurance. These policies provide coverage for long-term care expenses while also offering a death benefit from beneficiaries. However, utilizing the policy for long-term care may reduce the overall payout. The living benefits associated with life insurance policies allow the policyholder to access a portion of the life insurance payout while still alive and cover medical expenses, including long-term care. The cost of adding living benefits to a life insurance policy varies, as it might be integrated into your premiums, or some policies are added for a nominal fee on others when purchased. It's important to note that the criteria for accessing the benefits for care may differ among insurance companies, so it's crucial to read the details of your policy thoroughly. Yep, always check the fine print. For example, a trigger for accessing the benefits could be a terminal illness diagnosis, poor health, or severe cognitive impairment. Life insurance policies with long-term care riders can be an attractive alternative to those who want both life insurance and long-term care coverage. However, it is essential to carefully consider the consequences of utilizing the policy for long-term care, as it may reduce the death benefit available for your beneficiaries. Annuities for long-term care. Let's talk about immediate annuities. Annuities can be used to fund long-term care expenses, providing an alternative to traditional long-term care insurance. These financial products offer options such as immediate annuities, which provide guaranteed income, and deferred annuities with long-term care riders, which can offer more flexibility. As you consider annuities as a long-term alternative for long-term care planning, it is important to understand the advantages and disadvantages of each type. Immediate annuities can provide a steady income stream, while deferred annuities with long-term care riders offer the potential for early access to funds if needed for long-term care expenses. Immediate annuities involve a lump sum payment in exchange for a guaranteed income stream, the ability to use the income for long-term care expenses, the assurance of a lifetime income, the ability to regulate the payment amount, and the possibility to add a beneficiary. While immediate annuities can be an attractive option for funding long-term care costs, there are some disadvantages to consider. A substantial sum of cash, such as $50,000 or more, is necessary to invest in an immediate annuity. Additionally, the income generated from the annuity may not be sufficient to cover the cost of care. The taxation implications of annuities can be complex, so it is advisable to consult a tax advisor to understand the future tax advantages and obligations associated with immediate annuities. As you explore other alternatives for long-term care planning, keep in mind the benefits and drawbacks of immediate annuities. Now let's talk about deferred annuities with long-term care riders. Deferred annuities with long-term care riders offer the following benefits: pre-planning for long-term care, monthly payments for long-term care expenses, increased flexibility compared to immediate annuities, the ability to modify the payment amount, the option to add a beneficiary. However, it is important to note that these annuities require a large upfront investment. Furthermore, deferred annuities with long-term care riders provide the possibility to access the funds early if required for long-term care costs. This flexibility can be valuable for those who may need to access their funds sooner than anticipated due to health issues or other unforeseen circumstances. When considering deferred annuities with long-term care riders as an alternative for long-term care planning, it is essential to weigh the benefits of the increased flexibility against the potential drawbacks, such as the large upfront investment required. As you explore other options for long-term care planning, consider how deferred annuities with long-term care riders may fit your overall strategy. Now let's talk about hybrid long-term care life insurance policies. Hybrid long-term care life insurance policies offered by an insurance company such as York Life Insurance Company combine the benefits of both types of coverage, offering either a death benefit or long-term care benefits. These policies require a significant upfront payment, typically in the form of one large premium or a few large payments over the courses of a few years. By purchasing a long-term care policy, you get long-term care coverage equivalent to a traditional policy as a reward. Additionally, you are entitled to the amount of the life insurance that would be passed on to your loved ones in case of long-term care benefits are not used. One advantage of hybrid policies is that you receive a return on your investment even if you do not use the long-term care component of the policy. However, if you utilize the long-term care benefits, the life insurance payout may be diminished or annulled. It's important to weigh these factors when considering a hybrid long-term care life insurance policy as an alternative for traditional long-term care planning. Hybrid policies can address a persistent concern for many individuals: the possibility of paying into long-term care insurance policy for an extended period of time without ever needing it. By combining life insurance and long-term care coverage, you can ensure that your investment is not wasted, providing peace of mind and financial security for you and your loved one. However, it is crucial to consider the drawbacks of hybrid policies, such as their higher costs compared to traditional policies and the relatively small life insurance benefits they offer. As you explore the alternatives for long-term care planning, carefully weigh the advantages and disadvantages of hybrid long-term care insurance policies before making a decision. So, evaluating your long-term care planning options. When evaluating long-term care planning options, it is essential to consider your personal and family preferences, your health status, potential future care needs. Compare the costs of different options. By taking these factors in account, you can make an informed decision about the most suitable long-term care planning option for you. It is highly recommended to compare at least 3 companies when shopping for long-term care planning. This will allow you to gain a better understanding of the different options available, as well as the potential costs and benefits of each. Additionally, consulting a financial advisor can assist in the planning of long-term health care expenses. As you evaluate your long-term care planning options, remember to consider both the benefits and drawbacks of each alternative. For example, short-term care insurance may offer low premiums and flexible benefits, but may not provide adequate lifetime coverage for all care needs. On the other hand, hybrid long-term care life insurance policies may provide a more comprehensive solution, but at a higher cost. By carefully weighing the pros and cons of each alternative, you can make an informed decision that best meets your needs, financial situation, and risk factors. Ultimately, the goal is to ensure that you have a solid plan in place to cover the potential costs of long-term care, providing peace of mind for you and your loved ones. Seeking professional advice. Consulting a professional for long-term care decisions can provide valuable insights and guidance, helping you make educated decisions regarding your care options. Professionals can also assist in navigating complex legal and financial matters, offering reassurance and confidence in your long-term care planning decisions. There are several types of professionals who can offer advice on long-term care decisions, including fee-only financial advisors, elder law attorneys, geriatric care managers, and insurance agents. It is important to consult with a fee-only financial advisor or insurance specialist to help you navigate the intricacies of long-term care planning and choose the most suitable option for your situation. When seeking advice, be sure to research and compare multiple professionals before making a decision. Look for professionals with experience and expertise in long-term care planning. Look for professionals with a strong track record of client satisfaction. By carefully selecting a professional to assist you in your long-term care planning, you can gain access to valuable knowledge and advice, ensuring that you make the best decision for your future. In conclusion, seeking professional advice is a crucial step in the process of long-term care planning. By consulting with experts and carefully weighing your options, you can ensure that you have a solid plan in place to cover the potential costs of long-term care, providing peace of mind for you and your loved ones. In conclusion, in this audio cast, we have explored various alternatives to traditional long-term care insurance, including short-term care insurance, life insurance policies with long-term care riders, annuities for long-term care, and hybrid long-term care life insurance policies. Each alternative offers unique benefits and drawbacks, making it essential to carefully consider your personal needs, financial situation, and risk factors when making a decision. As you reflect on the information presented in this audiocast, remember that the ultimate goal is to ensure that you have a solid plan in place to cover the potential costs of long-term care, providing peace of mind to you and your family members. By exploring these alternatives, seeking professional advice, and carefully evaluating your options, you can make an informed decision that best meets your needs and secures your financial future. So now I'm going to address some frequently asked questions on the alternatives of long-term care insurance. One of the first questions I get often is, what is the biggest drawback of long-term care insurance? The biggest drawback of long-term care insurance is its increasing premiums over time, which may become unaffordable for some seniors, as well as the lack of a return of a premium if you never require long-term care. This can be a major financial burden for those who are already on a fixed income and may not be able to afford the rising premiums. It is also important to consider the long-term care implication of purchasing long-term care insurance and to weigh the pros and cons before making a decision. And I recommend that if you have bought long-term care insurance, it's really important you read the fine print. There's so many hoops and expectations you were expected to go through in order to qualify for the payout of any kind on the benefits. Another question I'm getting is, what is a type of insurance to avoid long-term care insurance? For those looking to avoid long-term care insurance, a short-term care insurance is an option that offers coverage for up to a year. And another question I get often is, what alternatives can you imagine that would cover the cost of long-term care? Alternatives to long-term care insurance include self-insuring through personal savings and investments, taking a reverse mortgage out, purchasing annuities for regular income, opting for life insurance with long-term care riders, qualifying for Medicaid, or choosing to live in a continuing care retirement community. Another question I get asked is, what are the three types of long-term care policies? There are three main types of long-term care insurance policies: traditional long-term care, hybrid long-term care policies, and life insurance with a long-term care rider. Each type has different advantages and disadvantages that need to be carefully evaluated before making a decision. It is important to understand the differences between the three types of long-term care insurance and how they can best meet your needs. Traditional long-term care insurance is designed to cover the cost of custodial long-term care services. What are the main reasons for needing long-term care? The primary causes of needing long-term care are aging, illness, and disability. This lesson has been brought to you by Caregiver Relief. I'm Diane Carbo, RN.
Thank you for watching. Don't forget to hit that subscribe button and ring the notification bell so you never miss an episode of Caregiver Relief. If you have any thoughts, ideas, or suggestions for future videos, topics you'd like us to cover, or even improvements you'd like to see on the channel, drop them in the comments below.